Hello, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Chris Plumb, Head of Current Car Valuations at CAP HPI. He's joining us for this exclusive roundup of how trade values performed over the course of the month of January. Now, by way of a quick recap, last month CAP HPI reported a movement of minus 1.7% in December, very much in line with both the average for the month and the small monthly dips we saw during that final quarter of 2025. In this episode, we'll also take a closer look at some of the key trends across vehicle sectors and fuel types in January. And Chris will also share some of his thoughts on how trade values are likely to perform in February and Q1. So welcome back to the pod, Chris.
Thanks, Curtis. Good morning, Phil, as well.
Yeah, no problem. Good morning, Chris. Good morning. So, busy start to the year for you, Chris, as always. So we'll get straight on, because I know we're catching you right at the sort of deadline period as well. So you've got a lot coming at you. So, I mean, to kick off, as usual, can you talk us through the headline trade value movement for that 3-year 60 point, and obviously how do they compare with previous Januaries going into February movements?
Yeah, no problem, Phil. So the headline movement at that 3-year 60,000 mile point was actually quite stable through January. We recorded an average movement of 0.2% down, which roughly works out to be about £50 on average. As Curtis was sort of mentioned in the intro, it is a big contrast to the last 3 months of last year, where we saw some big drops of minus 1.1, 1.7 and 1.9 back in November. So the market has definitely steadied from the last quarter, and January has performed relatively well. And if we look at that January to February movement of 0.2% and compare it to we like to do, compare it to that seasonal average, the actual seasonal average is minus 0.2%, so it's bang in line with the seasonality. And it's a bit of a general misconception that values go up from January to February. It's normally February when we see that slight improvement in values, because only I think it's 3 years since 2012 when we introduced Cap Live, we've actually reported on a positive movement. So your January kind of performed exactly how we'd expect it to perform.
Yeah, I mean, that was a question I was going to ask, that, normally everyone has this idea that, you get this slowdown at the end of Q4, people pull back from buying, values soften slightly, and then everyone comes out buying and values start to, rise going into January. But I think predominantly, as you just sort of pointed out there, it's not that always the case, and it does take a little bit more time before you see that strength return.
It does. I think the first couple of weeks in January, you often see the vehicles that are on offer in any volume of the re-entries from the vehicles that didn't sell the back end of the previous year. Once we're through that and the fresh stock starts coming in and the retail market starts to gain momentum through January, that's when we see the market come a little bit more alive. Even though that we say 0.2% down, it is slightly worse than what we reported January 2025, which was a 0.1% down. But I think a big difference this year, and the reason it's just saying that the movement's in line with expectation, we've actually, within CAP, we've received, I think it's 10% more data for January this year compared to last year. So actually we're seeing more cars coming through, more volume. It's really good news from especially a wholesale perspective. It means more vehicles are selling, more demand, more appetite from retailers to replenish stock. So more volume, but it hasn't necessarily translated into a bigger movement down. It's very marginal from what we're seeing, and it's been in line with that seasonality.
And Chris, before we look at specifically at fuel trends, which I know is always a hot topic when we catch up with you, were there any notable price movements by price bands and age points for the month?
Yeah, most of the movements, all the age and mileage points that we report on, have been fairly negligible, but there's been some nuance within that. So the younger cars or the 1 year, 10,000 mile profile came back slightly more, so 0.3% down, which equates to about £140. Whereas probably the strongest part of the market that we've seen are some of those older vehicles. So 5-year-old stock was flat, no movement on average, even though there will be models that have moved up and down within that. It's actually within the 10-year-old cars that we've seen most movement on, up 0.9%, which equates to about £30. So there seems to be some very strong demand for those price-pointed vehicles. It's interesting when we break down the movements. We don't always report on this, but when we break down the movements by trade price band, it was those vehicles sub £10,000 that really stood out, especially those vehicles between £5,000 to £10,000, which rose between 0.4%, but the vehicles under £5,000 were actually up 0.9%, and particular strength within those petrol and diesel models as well.
That's interesting, isn't it? So that there is, it just highlights there is still buyer demand for those used cars using petrol and diesel.
Yeah, and I think especially for those older age points, obviously that's probably very skewed because there's not that much supply of BEV and alternatively fueled vehicles in the lower age bands, but there's still, household incomes are still being squeezed. Inflation, as we know, was up. So it kind of translates quite well, I think, into also it makes sense to us that consumers and retailers are focusing on that sub £10,000 area of the used market, and that's probably the strongest because that necessarily might fit most people's monthly budgets.
And how did the various vehicle sectors perform? I did notice it was a particularly volatile month for SUVs, wasn't it?
Yeah, sector performance, as you say, sector performance has varied. We have city car, executive, and normally couple supercars in with city cars and executives, but they did show the most positive movements. They were actually up at that 3-year point, 0.4% up, while luxury executive was the weakest at minus 1.1. But yeah, you are right. SUVs continue to be the most volatile. But I have to say the picture has improved from what we saw at the back end of 2025. The overall movement for SUVs was 0.3% down, but there's nuance within that. Small and medium SUVs dropped 0.3 and 0.4% respectively, while large SUVs actually on average held flat. I think the positive signs where we saw some models of SUVs that were in plentiful supply in Q4, and I think buyers could afford to be selective because they're being offered across not just one supplier, across multiple platforms and multiple vendors. We have seen an improvement in the percentage of cap and their performance. So it looks a lot more steady. I know we'll touch on fuel movements in a moment, I guess, but BEVs and PHEVs and SUVs were the weakest performers, actually down 0.9%. And again, we saw a little bit more strength in those petrol and diesel values as they only slipped a little bit.
And talking about that, the fuel type sector, I mean, what has been happening broadly now and trends, we talk about BEVs a lot, but actually, what you're seeing now across the various fuel sectors, from your ICE vehicles through to your hybrids, your plug-in hybrids, compared to your BEV vehicles?
Yeah, fuel type is probably one of the most interesting the area to sort of monitor. At the 3-year point, hybrids, so pure hybrids, were actually the best performing fuel type of them all. They actually rose slightly at 0.3% up, as petrol and diesel barely moved, just down 0.3% down, which equates to £25 down for petrol and 10 for diesel. Plug-in hybrids and BEVs came under the most pressure, both down 0.6%, which is about £140. But as we know, especially the story around BEVs, it is a lot more nuanced within that. We saw much higher supply, actually touching on that supply issue, or not supply issue, the increase in supply in January from our data. For BEVs particularly, volumes are up circa 40% year on year compared to the first 2 weeks in January 2025. But yet values haven't fallen anywhere near as much as they did in the previous years. So in 2025, we reported a movement down for BEVs of 1.1%. And in 2024, it was down 1.8%. I had to recheck this when I was looking at the figures, and in 2023 it was actually a minus 6.6%. Of course, values have corrected a lot or realigned a lot since that, but the BEV market actually feels a little bit more balanced. So I can take some positives out of it, even though the BEV values have come down more than any other fuel type. Put that in context. We're seeing more data for BEVs than we've ever seen. We know conversions are up there, and in some sales even this year, especially fleet and leasing, BEVs can make up 50% of that profile. But conversion rates, average net number of sales attempts are comparable, if not better, than some of our ICE product. So I think gone are the days back in 2023 when we did report that minus 6.6%, when that was due to conversions and vehicles not selling and not being an appetite there from the retail market. We've come a long way. There's lots of demand for BEVs. I just think there's a little bit more of extra supply than previously. Again, buyers can be more selective of certain vehicles. But there's been some BEVs that really stood out last month. The ones that actually went up, and there were a few that went up. So Nissan Leafs were up 2%, £150. Corsa look at extremely good value for money, especially between that 3 to 5 year point. We're up £80 or 1%. Tesla Model 3 was down 2%. Again, it's one of those volume models out there. And one of the worst performing models was the Subaru Solantra, which I probably pronounced wrong, down which was 4% down or £550. So BEV performance is still very model specific, but overall probably slightly more stable than we've seen from other Januaries in the past.
And you do call that increased volume out in the editorial, don't you? The more data that you're seeing, but on, as you say, the positive that you are also seeing some stabilisation in that BEV sector. But I mean, you talk about the standouts within that BEV sector. What is there some bigger, winners and losers in the non-BEV marketplace? You talk about obviously that volatility within the SUV sector. What are the winners and losers in general across the fuel types?
In terms of models, Phil, or
yeah.
I think that there wasn't that many, say, vehicles to go up. We've seen things like, I think the positives that we saw last month. So again, one of the volume models that we were seeing last in Q3 was something like a Qashqai petrol. We've seen them stabilise, and if not get stronger. I think they went up 1% last month, and I think even though we're very early into February's to March's, we've even seen them improve again, and they've gone up another percent, which I'm sure we'll be talking about next time, that we catch up next month. But we have seen some of those models that haven't performed as well as stabilised have started to increase. So things like the Nissan Qashqai have come back a little bit, and I think that that's a positive for seeing them stabilise. Yeah,
because they've been on a little bit of pain, haven't they, with volumes in the market.
I think to say they've been very volatile is probably a little bit of an understatement. It's good. There's demand out. Buyers are out there buying them. We can see that people are selling them very well in retail, and that will come back.
Yeah. Well, we'll be back after this short break with more from Chris and CAP HPI's January trade values.
You're listening to all the chatter that matters on this special weekday episode of Motor Trade Radio, powered by Motors and Cazoo.
Welcome back. Now, Chris, each month you analyse retail activity by days to sell. How did they perform in January compared to December?
Yeah, I think retail's been an interesting one to track on that front. I think the good news from sort of a general perspective from retail is that December and really November was quite tough from the feedback we were receiving from retailers out there. A little bit of a hangover from the budget being so late, and I don't think that helped anybody. It seemed to dent some of the consumer confidence, and not just automotive retail. All the reports coming out from November and early December is that retail was down for most sectors. I think there was this hope that after the budget details were going to be finally announced, consumers' attention would turn back to buying some of those big ticketed items. But in reality, we were straight into December, and people's focuses switched to Christmas and the festive period.
Yeah.
from Boxing Day onwards, and even Christmas Day, the night onwards, the reports that the inquiry rate started to increase, momentum started to build, and market conditions through January have been a lot more positive than we saw the back end of Q4. So we take that as a real positive. So the market has been a lot more healthier from a retail perspective. The days to sell, we have seen slightly rise versus December, but that's completely in line with what you'd usually see for this time of year. January always lengthens a touch as fresh stock comes through and retailers reset their forecourts. Fuel type behaviours were interesting again. But looking at those days to sell, BEVs remains the fastest selling fuel type on average, roughly about 7 days quicker than petrol models. And we saw some strong results on that from some of those core mainstream models out there, mainly things like the Model 3 and the Model Y. So yeah, that's been a positive on that front. So days to sell has increased slightly. We'll start to come back down, but within the fuel type, especially between those, again, 3 to 5 year old models, BEV seems to be performing the best at the moment.
And overall, how did those days to sell average over the course of the month? What was the figure?
Yeah, I think I don't have off the top of my head. I think we saw it within our data rise from December, from about late 40 days in December to a touch in the early side of 50s in January. So not a massive increase, but an increase nonetheless. But obviously that encompasses some of the weakness. So the way we look at the days to sell, so it's days since seen the vehicle advert to the day then we last saw it. So that obviously encompassed some of that, the slowness that you see in the last quarter, depending on when it first went on. But yeah, January is a bit of an uptick in that trend, but still it kind of what we'd expect, very comparable to previous years in January.
Yeah, and you also polled the views of the auction houses. What were they telling you about stock levels and trade demand for the month? And anecdotally, you mentioned about activity over Christmas and Boxing Day. I did notice in the editorial that some dealers were actually sourcing stock via auctions on Christmas Day.
Yeah, and that's been sort of some of the feedback, and we've seen it within our data. The sold date, there's a few that came through on Christmas Day. Come on, it's a good opportunity, less competition in the market, especially for those buy it now platforms. You might get a bargain or a vehicle that's a price advantageous to yourself. So we do see that.
Probably a bit dangerous on the domestic level, though, if they're online ordering stock while they're supposed to be with the family.
It might be an indication to how your Christmas Day is gone if you're on there. But we'll leave that. But yeah, I think from the actually that period between Christmas and New Year is really interesting, because since the pandemic, so since 2019, with more of an acceleration of purchasing and selling vehicles online in the wholesale market, it means that we don't really have that. It is quieter than normal times, other times in the year, but there is an opportunity to go out, replenish stock and get those vehicles in, especially if you're focusing on the new year or you're getting off to a fast start in the new year. But yeah, the wholesale market has been particularly, it's been quite positive. Again, the last quarter was challenging for some as we got towards the Christmas period, but January started really well. So market conditions have improved considerably. We talk about the first week. Those conditions were much better than the last week in or the last normal working week in December. There were more buyers in the market, especially supermarkets, independents, especially franchise dealers. It was noted by most of the auctions and wholesalers that we talked to. They were back out in the market being engaged. And I know as many retailers get towards the year end, they have the year end stock holding positions and the purse strings do get tightened. Once you're into the new year, that then gets loosened again, means there's an appetite or an opportunity to buy more stock. And we saw that build all the way through all the way through January. So the first week of January was fairly positive, uptick in conversions, uptick in performance against CAP. Second week was probably, as we headed into the new year, that we thought would be the strongest week, but it just continued to warm up. It was the third week of January, or the start of the third week of January, where we saw the market, I'd say, full foot on the accelerator, and really became quite competitive. And that kind of translated into the auction survey results that we received. So 82% of retailers auctions reported an increase in stock from December. Back end of last year, a lot of the whole auctions were saying that they were running low on stock, so they saw that improvement. Something that we've noticed over the last couple of years is there have been some vendors, probably from about the 10th or the 15th of December, if the market conditions aren't in their favour, pull the shutters down and say, we're going to go again in January. So that may translate well to the that 10% increase in volume that we've received into CAP HPI. So there was a little bit more volume in the market, and that's continued. But auctions, it's really positive from that. But more importantly, as stock increases or supply increases, you need to demand to increase it in line with it or even above it, meaning the market to be very resilient or robust. And I think the good news is 91% of the auctions reported an increase, with actually none of them saying that it had fallen back from the previous month. So that is really good. And just as sort of an indication to that increase in conversion rates, end of December roughly ended up about 55 to 60% conversion rate. As we approach the end of January, that has risen on average to about 80%. But we're now hearing, or were hearing, for the odd sale out there that was rising to sort of 90%. I think we've all seen those pictures from some of the evening budget sales as well across some of the auctions of just how busy that they've been and the demand out there for that. So yeah, the wholesale market has seemed to have warmed up as we've gone through January, and we're now entering February with that momentum continuing.
And I mean, on that, Chris, just sort of finally on that one, thinking about what is your expectations. We talked earlier about the start of today's podcast that the values misconception going from December into January rise. It's more from January into February, more into towards March there. What's your view now for really as we move into February and March and this first quarter of the year? What are your expectations?
Yeah, as I say, it does feel like we're entering February with genuine momentum in the wholesale market. And as the performance has increased week on week, we think February is going to be fairly positive. Historically, the average movement from February to March is an increase of 0.4%, again at the 3-year point. Last year, we saw exactly that happen, that 0.4%. And we think there's going to be a broadly similar pattern this year, especially as the demand seems to be out there and an appetite to go and replenish stock at the moment. So yeah, relatively that positive movement. If we came in about 0.4% again positive, it wouldn't surprise me. The only thing that I do not want to talk the market down because I think we're in a good place. But like we saw in January, there is the expectation that there's probably going to be a little bit more stock around than we've previously seen. And that'll be a theme that we carry on for most of this year, especially as supply from those 3 to 5 year old cars start to increase. But yeah, generally, we think that the market is going to be in good health in February. Positive movements, conversion rates probably continuing to improve. Lots of competition in the wholesale channel. So yeah, I think we're in a good place.
And finally, Chris, as your head of current car valuations at CAP HPI, what's caught your eye so far this year? And what are some of the trends you'll be keeping close tabs on?
Yeah, I think that what's caught my eye so far this year has been a slightly more increase in volume as we've gone into January, but it hasn't necessarily impacted the average movement that we've made. But that's only one month. The budget end of the market, the sort of sub £10,000, sub £5,000, the market being the strongest, has been quite interesting. But as I say, it could be a reflection of what consumers are looking for. I think going forward, I think in our forecasts, we're predicting probably up to the end of Q3, the market to perform very much in line with seasonality. So the average movements that we make are going to be close to those seasonal movements as supply and demand probably fairly well balanced. Easter is happening does fall slightly early. I think it's the first weekend in April. So we know that can sometimes cause a little bit of a down, or can cause a bit of a downturn in the market, and there's no reason to think that won't happen again. So with it being slightly earlier might impact the market slightly earlier than we've seen in previous years. But yeah, it's going to be, we think the last quarter of the year might have a little bit more, there might be a little bit more stock ground, mainly linked to 3-4 years ago when we started to see those increase in new car registrations, again coming from a low base. Supply is not going to be at 2019 levels, but it is going to slowly increase as we go through the year. There is going to be better supply of 3 to 5 year old vehicles. But that gap, or that vacuum in the UK car park, created by those, depending on which way you calculate it, but 3.2, 3.3 million new cars that we lost, does create a gap in certain age cohorts. And as it works its way, as vehicles get older and it works its way down, that's going to impact those 5 to 7 year old vehicles. So increased supply in 3 to 5, but 5 to 7 is going to become a bit more challenging for sourcing vehicles as well. So that will create sourcing problems for people who mainly look at that. But yeah, generally, the first 9 months, the market's going to be act how we'd expect it to. Maybe slightly more negative movements to the seasonality in the last quarter, but we're only talking marginal, not a big realignment. It's just a marginal movement down because of the extra volume. But yeah, in the short to medium term, first quarter, we think the market's going to perform particularly well.
Well, I mean, yeah, as I say, there's lots to think about. I think, it seems that the general tone, Chris, is that an air of optimism, an air of recovery and positivity, but with a side of caution that there's still a little bit of nuances out there that could change that volatility.
There's always things that everybody's got their eye on. Competitive new car market, we've all seen how strong some of those new car offers are going into the new year. There will be an element of cannibalization from the used buyer into the new as they get attracted by some of those. So that could take some of the demand out of the used market. There has been a little bit of an increase in supply into short cycle channels last year. I'm not saying short cycles are a bad thing, especially if there's robust remarketing plans put in place. So there could be a little bit more supply of that sub 12-month-old vehicles coming into the market. So there's plenty happening around the sides, but that core 3 to 5 year old, we think, it's going to remain particularly robust.
Yeah, well, I mean, as always, it's great to catch up with you, and obviously there's a lot more detail in the editorial for anybody that does want a deeper dive into sort of January's used car trends. Then do head over to cap-hpi.com website, and you get the full editorial there. Plus, it's got the LCV and other editorials on there as well, worth looking at. And obviously, I think tomorrow at 2 p.m. you've got your regular webinar, which gives people the opportunity to listen from you and your colleagues and have a bit of a Q&A at the end, I think, Chris.
Yeah, so tomorrow the 29th, if people want more of my dulcet tones, they can tune in to hear me go through the what's happened to used car values. We're going to focus more on what happened to used car values through the whole of 2025, so I'll give an overview of that. But we have Andrew Turner from our consult department, who's going to touch on where we think, what's going to happen from a new car perspective. Dylan Setterfield's going to touch on the forecast element for cars, a little bit around the fallout from the budget, because we've not done a webinar since the budget, how we think that's going to impact car values going forward. And then Dion's going to give us a view on the LCV market and how that's performed and how that's sort of kicked off for this year. So yeah, lots of detail in there. But yeah, if anybody wants to join or hasn't registered yet, head over to my LinkedIn page, and there's a number of posts on there. You can get the link from that or contact me directly.
But that's all for this special weekday Motor Trade Radio podcast. Many thanks to Chris for joining us today. Thank you to you for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors and Cazoo. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday.